Alright guys, so I'm gonna make this really quick video of today's price action. Um, Honestly, not the best price action today, but now looking at it in hindsight, there were a few opportunities that we could have taken advantage of. First thing that I want to identify is the fact that last week, right, we took out these lows and price close inside of that range. Typically, when price does that, what we'll see is some type of retracement to seek a new level of counterparty, or in this case, buy side liquidity, to then reprice lower. Honestly, I believe what was this, Friday? I believe Friday actually did that, right? Because Thursday took out that low, closed back in the range, and then Friday took out this buy side liquidity from this previous day's high right here. And then we come into today, right? So if we back out here, and let's pull DXY up. Alright, so DXY is over here. Alright, so coming into the day, in terms of, or as it relates to DXY, the very first thing that I was seeing was that this level here swept liquidity, right? So price will need to come up and mitigate that area to some degree. We also have basically a higher time frame break of structure here. Everything above this level seems to be balanced, right? Buy, sell, right? We're balanced up right there. All right, so everything up until this portion of price seems to be balanced, right? So I didn't necessarily see a reason for price to reach up here, at least not before giving some type of bearish reaction. So if we come to a 1 hour, immediately, I'm identifying this order block that rests over true day open. Let's come down to a 5 minute. Alright, cool. So that should be good enough, right? Alright, so once again, right, I'm IDing that order block that rests over true day open, which is from the hourly time frame. And then if we take our fib, we measured that just from body to body, and we get equilibrium right along true day opening price, right? So right away, I'm expecting price to reach here and give us some type of reaction, right? Now, I'll be honest, I was expecting this to fall or to continue with this structure here, because right now price, if we had to identify a range, right, price is between here and here, right? And so let's measure that range, because we understand that the bulk of our buying is going to be in the premium side of that range, in the discounted portion of that range, and the bulk of our selling, right, will be in the premium portion of that range, which this first POI rests in the premium portion of this range. So let's keep that in mind. All right. So I may have to, because I don't know if these two will play at the same rate. All right, cool. All right, let's just play them both out. All right, cool. Here, 15 minutes. All right, now I did take a loss on Euro USD today, but right away I realized what I had done wrong. All right, so here, this is that move here, right? This is where the DXY gets to this point and pushes down. So of course, Euro is going to do the exact opposite. Now, my original analysis on Euro USD was that price right? If we look at this, and I don't know if every broker printed this, but price has to trade down through this point, down and back up. This is what we call a volume imbalance. I'm sorry, had a brain lock. This is what we call a volume imbalance, right? Basically, a gap in price is called a volume imbalance, and what price has to do is not only trade to cover it, but trade back through it, right? So it has to provide buy and sell side delivery on both sides of that gap, right? To and through that gap. All right. So I'm expecting for price to come here. Now even back this up so you can get a better view of what I'm seeing last night. So I'm expecting price to come here, and I'm seeing this little area here which swept these lows. But what I don't like about this is this happened during the Asia session. I prefer to see POIs that form in New York and London. Maybe that's something you guys might want to pay attention to. But anyways, here's that spike where we see the DXY push to this POI, which is the previous day's true day open. And you can see the reaction, right? See how powerful that true day opening price is. All right, you see the reaction, and this move here was only to take out this little low resistance liquidity formation here, and then we tap into this POI, right? Now I'm not trading London, but this would have been a beautiful move, and then look what time it happens, right at 3 a.m. New York Eastern time, right? So if you were trading London, right, you could have taken a trade here. And then, of course, targets for this should be here, right? Price is going to definitely run this sell side liquidity pool, right? Target should be here, right? This was honestly, in my opinion, the move of the day, simply because of time. It's in correlation with DXY. Let's look at DXY and I'm sorry. Okay. All right, cool. Yeah. So here was the POI for DXY, right? So if you one key thing to note, guys, is when you're trading the majors, you literally have to trade with respects to what the DXY is doing. If not, then you are lowering your chances of being on the right side of the market, right? So we look here, right? You see this is where the spike happens around 2 a.m. And then right in that optimal, kind of that optimal time frame, we're getting DXY reaching this POI. And then here's a beautiful entry drill, right? We have everything that we need. This high led to breaker structure, low resistance liquidity, right at 3 a.m. And then, we can take the trade off of that. Now, I do understand that this, we have a level of equal highs here and low resistance liquidity. This is one of those cases where you learn when and how to bend the rules. In my honest opinion, I would not take a direct entry from here. Right, my entry would be based on some type of 1 minute or 3 minute change in delivery, which in this case we don't even have that, right? So of course, everybody understands that what we're looking for on time frames in terms of change in delivery is something like this, where we have that breaker and then price returns here, and then we get that entry there, right? Well, in this case, that didn't happen. What you could do is entry drill number 2 that I like to use, and that's where we enter at 50% of the body of the. So this is what I would call the purge candle. It's the bullish candle that started the seek of liquidity on this previous high over here. I'm not going to go into deep detail about it because I don't necessarily advise you guys to use it just yet. But basically, it's the kind of like that order block or that bullish candle that takes out liquidity, and then right away from that, right, price, we get displacement back in the range, right? You see this creating imbalance, and then price kind of gives us these highs and then induce those highs and push lower, right? So entries could have been taken from here, which is, in my opinion, well, not even in my opinion, it's factually more riskier. Because price could do it could respect order flow and push higher. So these types of entries are more so intuitively driven. You take a risk, but sometimes you just know, right? But anyways, let's keep moving forward. All right, so that possibly could have been a first trade today on EU if you were trading the London session. But I want to show you guys where my mistake came in today, right? All right. So I was so caught up on this level here, right? Which price did in fact push to that level. But what I did was I saw this area sweep liquidity, right? I saw a breaker here. I saw a breaker there. Let's cancel this candle out. So we have a breaker. I saw this little fair value gap here. And of course that swing high, right? We all know that is buy side liquidity, right? So I decided to take trades from this area, right? And everything here is pretty much balanced, so I'm not expecting the price to run up there. But what I was expecting is for price to at least run previous day's low, right? Why am I expecting that? Because from a higher time frame, right, that is the constant cycle. That is the delivery cycle that we're in right now, right? This day here was just to pick up fuel to keep repricing lower, right? Remember, every now and then there's going to be a correction. Price will do the opposite of what has been happening, right? We see here every day's previous day's low has been taken every time, and they have a correction, right? That correction will always seek opposing liquidity pool, right? And then they continue, right? So same thing here, right? So I'm expecting previous day's low to be taken. Which previous day's low is here, right? All right, so now let's go to the smaller time frame. Now, if we play this out, right, we have a reaction, but then price trades right through that area, right? Trades through and just barely sweeps that area, and then let's just play it through some more, right? All right, so let's stop right there. All right, now let's focus on this move here, right? I want you guys to focus on this high, and let's also focus on this high, right? We look at DXY, let's focus on this low, and then let's focus on this low, right? Now, DXY and Euro USD have a very high negative correlation, meaning that the pairs move inversely, but they also, I guess, move in the same manner, just in an inverse way, right? Basically, when Euro USD is creating higher highs, the DXY should be creating lower lows, right? When the DXY is creating higher highs, then the Euro should be creating lower lows, so on and so forth. Now, here's where the perfect opportunity could have came in today. So if we go to a 15-minute chart on the Euro USD, right? And let me pause for a second. All right, these sales here, when I come back and I look at price, what I'm doing is I'm literally taking a trade, right? So if I go, because this is the range, right, from here to here. So I'm taking shorts in the discounted portion of the range, right, which is a big no-no. And look what is built up in the discounted portion of the range, right? Nothing but tons of buy side liquidity. You know, what I should have been paying attention to was this here, right? Price, you know, maybe that could be spread or whatever, but price ultimately taps into this, right? And then it reprices lower, and this happens at 10:30, right? At 10:30, right? So this was my big mistake today, right? Taking a trade in the discounted portion of the range, because what I did not pay attention to was that from this was point A to point B, right? So I measured this range. What I was doing was measuring a micro range inside of a macro range, right here, and this was the micro range. So I was feeling like, you know, this was the premium portion of this small range, which I should not have been doing, because here from point A to point B, that is the bigger range, right? So that was my major mistake. Had I been focused on that, then I would have been more primed to take these entries instead, understanding that this area took out liquidity and mitigated something, right? So here's a very highly probable area. We have displacement, and even though price slows down, it still breaks structure, right? And then here's the other thing. This is that first swing point inside of the range. So once price breaks this level here, right, this is kind of that first true swing. So of course this area is going to be induced, right? So entries should have looked like this, you know, nice 10 pip stop, or even lower, 8-9 pip stop, and then we'll be targeting that previous day's low, which is here, right? Easy 1 to 5, guys. All right, but now what I want you guys to take your eyes to is here. All right, so we see this low, right? This very first low, right? Right, so there's a low, and then there's a high, right? Now DXY respects this low, right, making a higher low. The euro disrespects this high, right? It violates this high, making a higher high. So now we have an anomaly, right? So basically what we have is the euro doing this, and then we have the DXY doing this, right? So now what we have to see is that this is the smart money hands being exposed, right? Because all of this is a false move. It is just accumulation to send price in the opposite direction, right? This was a true move, and then this was the fake move, right? So in seeing that, right, this would have built more conviction to take this particular trade here, right? So those would have been shorts, and that's honestly the only two opportunities that I saw on the euro today. But I just kind of wanted to point out that mistake that I made. And then what we got right now is honestly, let me take this away. All right, so they're going to run this high for sure. But here's an entry drill that could have been taken on the euro, which time, and for me, I'm not trading this. This is happening at 3 in the afternoon. But look what we have, right? This is good teach tape. All right, let's take out this. Let's take that out. This area does not matter anymore. All right, remember this here was that previous day's low, right? All right, this was that previous day's low. And this is a 15-minute structural point, right? So they're definitely going to keep pushing higher until they attack some buy side liquidity pool. But anyways, so right after taking out previous day's low, look what price does, right? It gives us our signature price action. Oh shit, come on. All right, cool. All right, so it gives us our signature price action, right? It gives that low, then it sweeps, breaks that structure, and then of course we have a buildup of liquidity down here. It gives us that, reprices lower for the true sweep, and then boom, the expansion, right? And look, and we've just taken out that 15-minute structure, right? So on this, entries could have been taken from about 50% of this order block. Right, with the understanding that there is a major inducement, previous day's low taken, and then there's also a minor inducement, right? See this? These lows are swept. So you have a major inducement and a minor inducement. Major inducement, minor inducement, right? And they just took out this liquidity pool, but I suspect that I think they'll take this area out because we have a nice area of imbalance in here, or if I've already got. But anyways, this could have possibly been a very nice trade. 2-pip stop, attacking this pool first, which is first target, but ultimately this target here is what I believe they'll come to. All right, that was that. We can look at gold very briefly. Same idea on gold, right? Here's the 15-minute leg, right? Of course, this area was enticing on a lower time frame, but it's the discounted portion of the range. And then we see price pushes above equilibrium, pushes to premium prices before we see them start shorting it again. One thing that I want you guys to note is, so of course we're not support and resistance traders, but if we understand price delivery and how price will be sensitive to certain areas, I want you guys to start paying attention to things like this, right? It's previous day's low, right? We have a previous day's low, and then what we also have is a PD array, higher time frame PD array, which hovers above that previous day's low. So what happens here is price finds this area where there's what I would call a lot of confluence, where I have a previous day's low, higher time frame PD array. Let's see what this looks like on the 5-minute chart. Okay, cool. And then we have this area here. It's kind of that void a little bit, and I think this should be 50%. Yep. Right. So things like that, right? That's a major confluence, right? Look how all those things line up. Previous day's low, and then I want to say this is 62% here. This just shows us how precise this algorithm is. All right, so that's like 3 or 4 confluences at this level right here. 1871 level, right? 62% OTE level. This little void right here, or imbalance right here, 50% of that aligns with the previous day's low, right? So this alone could have been a nice short. Now, when I trade gold, I like to stay within 35, 40 pips in terms of a stop, but I do believe they'll run this low because there's a previous day's low somewhere. I'm not scrolling all the way back, but somewhere in this range. And then from a weekly standpoint, here is a nice level of imbalance. So I think that gold is pushing down here, right? that's that, guys. Not a whole lot from today, but even through what I would consider not the clearest price action, looking back in hindsight, if we focus, then we see where opportunities could have been taken. And here's that's the breaker that was created. Right, this was the breaker, and then price pulls back up right inside here, and I think that's down to up. So there should be some imbalance right here. Let's check out and see. All right, so here's an order block. Right, remember what I said about order blocks that we find inside breakers, right? Those are high probability areas. Yeah, and then we have a lot of order flow established right here. So this could have been a nice trade, but it's happening at 12:30. I'm not trading that time frame. I'm cool watching it run away. Yeah, so we'll see what we get tomorrow. Right now we had previous day's low swept. I honestly expect them to keep running out previous day's low until we see something change on the higher time frame, which I have not seen yet. Even though price got above here, we didn't even close above this 4-hour level here. So I think they're gonna just keep seeking sell side liquidity until we can confirm a change in the state of delivery. All right, so that's that. I'll see you guys tomorrow.